Well, hello everybody. This is Price Headley, and happy to have you back as we do a video weekly market outlook here on Monday, June the 8th, 2009. It's about 1:40 p.m., so we're about a little over halfway through the trading day, and then the markets are pulling back here today. And we're really at what I would call a crunch time juncture here. As I look at the major market averages here, the QQQQ, the NASDAQ 100, pulling back here today right into a crunch time level. This is pulled off of our Big Trends Tools and Resources Big Trends charts here. And you can see through the Trixie chart service, basically we've got a pullback coming in right here that is just now causing us a pullback on the percent R under the 80 threshold. We've got our percent R plotted as well as our efficiency ratio. Efficiency is still kind of not really in a super strong trend, but you can see percent R has been in a recent bull trend here over the last week and a half again, and now getting what we call a bull retest. So that makes today's low very, very key, which is just holding a little above 36 on the Qs. So if we close under this low here on today's low, Monday, June the 8th, then basically that would end that bullish setup. But in the meantime, it suggests it's a short-term bullish opportunity as long as that low holds on a future closing basis. Remember, it can go below their intra-bar. You just don't want it to close under today's low, or else that invalidates the bullish setup. If we click over and look at the other big averages, we look at the Dow, the DIA, we're seeing a similar pattern, literally right back to the key 80 threshold here. So right on the verge of a retest. Right around 86.50 is the low so far in the DIA. Remember, that trades at 1/100th the value of the Dow Jones Industrials. So again, this is setting up for a possible bull retest. If we can get just a little bit of a tick lower here intraday, that should get it for the Dow. And then the SPY, very similar. So SPY setting up again with the pop here to 79 on percent R. Remember, anything back under the 80 threshold is what I look for. We had 3 of those key tests on SPY during the last leg of the uptrend back there on March 30th, right at that low right here. And you can see great short-term buying opportunity. Another one that came in here right off the April 20th low, and you can see while it opened below there, the next day it closed back above. So that's why the close is so key after we get that key low established. We don't want to see it close underneath that. Had a third one that came in and held right off of that test. That was about 88.50, initially snapped up, then it briefly violated, so it got out, then right back in, and now we're getting another retest right here. So today's low on the SPYs, it would be the next low to watch. Currently, we watch for whatever the full official day's low is. Right now it's 93.04. So basically just a hair above 93 bucks. We don't want to see it close under that low, 93.04. At this point. So that's what you look for in future daily closes, so watch that very, very carefully. Also want to keep a close eye on the VIX, the volatility index. You can see a long, steady decline we've had, but the one thing I haven't really cared for right here is that we basically broke out of this downtrend looking at percent R that had been so oversold as it was steadily dropping here back in most of May, got the retest that violated, and now we just came back under to try to test back under that 20 threshold, right on that low there back on the 29th last week. And basically you see a situation in which we've got a market that did not further break down the VIX. So while we're seeing it hover right near the 20 threshold, to me this says it's basically a trading range now, believe it or not, after the big drop that you've had. It's a trading range and not a trend. So that means that basically 30 is still a very important line in the sand. We're sitting here right now as we speak about 30.9. So basically we've got a VIX holding around the 30 level, and you can see the bands are stuck between 25.5, 36.8 on the acceleration bands. And you can overlay, of course. I'll also keep an eye on indicators like Bollinger Band. So if you want to go in here, plot a Bollinger Band with a 20-day 2 deviation, you can basically also add that to see how that's comparing, and you can see that's going to be a little tighter when we're stuck in one of these kind of slower trends, really more of a trading range. That's a range between about 28 and 34, and that fits with the, right now we're about the midpoint right here, about the 20-day simple moving average right near 31. So it's crunch time. That's held this little downtrend in place, but I think you're seeing a shift where you'll probably see a snap up in the volatilities as a market. If it breaks that percent R retest, I think things should get quite a bit more volatile And so in the meantime, if we can hold this retest, it says that the market can see another snap down in VIX and another snap up if we hold at today's key low. So I would be saying that we're actually, in my Option Shark service, just bought a call on this dip this morning, and we're looking for those kind of opportunities. But of course, gotta be tight on your stops. If it violates today's lows on a future close, any end of any day, then we would say, okay, it's going to invalidate that signal. Otherwise, it sets us up for a short-term bullish opportunity. So we'll see, but it's all about low risk entries, keeping your stops tight, and when you're right, letting those winners run. So that's the secret of the game, and wish you a successful week of trading.